Welcome to New Just Media. Today I will talk about the income tax in England. I will give you some overview on the income tax. I will also talk about the property tax, self-assessment, VAT, NI, child benefit, and many more in my upcoming videos. So please don't forget to subscribe, share, and like the video. This video is sponsored by Finvalley Ltd, who provides financial service. Coming back to the income tax point, as we are all aware that we need to pay income tax on our income. However, you do not have to pay tax on all types of income. You need to pay tax on things like money you earn from your paid employment, then profits you make if you are self-employed, including from services you sell through websites or apps. I will discuss on the self-assessment later in my other videos. You may also need to pay tax on the income that's not from your employer or not already included in your self-assessment if you work for yourself. This may include money you are regularly earning from things like selling things, for example, at car boot sales or auctions, or in online, doing casual jobs such as gardening, food delivery, or babysitting, charging other people for using your equipment or tools on a regular basis, renting out property or part of your home, including for holidays, for example, through an agency or online, creating content online, for example, on social media, and you are regularly earning from this kind of activities. You also need to pay tax on some estate benefits. The most common estate benefits that you pay income tax on are bereavement allowance, previously known as widow's pension, carer's allowance, or in Scotland only, carer support payment, contribution-based employment and support allowance (ESA) is taxable. Incapacity benefit from the 29th week you get it are also taxable. Job seekers allowance (JSA) is also taxable. Pensions paid by the Industrial Death Benefit Scheme are taxable. The state pension is also taxable. Widowed parents allowance, you need to pay tax on it. You also need to pay tax on most pensions, including state pensions, company and personal pensions, and retirement annuities. You have to pay tax on all this income. Then next slide, it is also I'm going to talk about the taxable income. You need to pay tax on rental income unless you are a live-in landlord and get less than the rent a room scheme limit. I will discuss more in details on property and rental income tax in my later videos. Benefits you get from your job also taxable. It is called benefit in kind. For example, if you get a car or any other benefits, they are always taxable. Income from a trust is also taxable. Interest on savings over your savings allowance are taxable. I have given the overview on the taxable income. Now I'm going to tell you about the income that are not taxable in England. In this slide, non-taxable income I'm going to discuss. The first 1,000 of income from self-assessment are not taxable. This is your trading allowance when you will calculate your self-assessment tax. As mentioned before, I will discuss in more detail on self-assessment in my later videos. You also don't need to pay tax on the first 1,000 of income from property you rent, unless you are using the rent a room scheme service. I will discuss in more detail on the rental income in my later videos. Income from tax exempt accounts like individual savings accounts, ISAs, and national savings certificates are not taxable. Dividends from company shares under your dividends allowance are also not taxable. Some state benefits are not taxable. The most common state benefits you do not have to pay income tax are attendance allowance, you don't need to pay tax on it. Then bereavement support payment, then child benefit, child tax credit are not taxable. Disability living allowance, in short they call it DLA, is not taxable. Free TV license for over 75 years old person are not taxable either. Then guardians allowance are not taxable. You don't need to pay tax on housing benefits. Income support through may have to pay tax on income support if you are involved in a strike, but apart from that you don't need to pay tax on income support. Income related employment and support allowance, ESA, are not taxable benefit. Industrial injuries benefit, you don't need to pay tax on this item. Lump sum bereavement payments are not taxable. Maternity allowance are not taxable. Then pension credit are not taxable either. Then personal independence payment, which is called PIP, are not taxable. Severe disablement allowance are not taxable. Universal credit are not taxable either. Then war widows pension, you don't need to pay tax on this item. Then winter fuel payments and Christmas bonus are not taxable. Working tax credit are not taxable either. You don't need to pay tax on premium bond or national lottery winning. So none of the lottery winning in UK, especially national lottery, if you win any lottery, you don't need to pay tax on it. Though in USA, you need to pay tax on winning the lottery. There is no tax on the rent you get from a lodger in your house that's below the rent a room scheme limit, which is £7,500. The tax exemption is automatic if you earn less than £7,500. This means you do not need to do anything if your earnings is from rent is 7,500 under the rent room scheme. I will discuss more in detail on the property tax in my later videos. Usually, you also do not pay tax if you only occasionally sell items or rent out property, for example, through auction websites or short-term rental apps. You can check with the HMRC sometimes whether you need to pay tax on these items if you earn on a regular basis from these things. Now I will discuss about the income tax allowance and current tax rate and how to calculate the income tax. Most people in the UK get a personal allowance of tax-free income. This is the amount of income you can have before you pay tax. The amount of tax you pay can also be reduced by tax reliefs if you qualify for them. However, I'm not going to discuss on tax relief in this video. I will try to discuss on tax reliefs in my later videos. So coming back to the tax-free personal allowance point, the standard personal allowance is £12,570, which is the amount of income you do not have to pay for the tax year 2024 and 25. The standard personal allowance I have already mentioned. Your personal allowance may be bigger if you claim marriage allowance or blind personal allowance. The personal allowance amount may get smaller if your income is over £100,000 per annum or in the tax year. Now in this slide I'm going to show you the income tax rates and bands. The table shows the income tax rates you pay in each band if you have a standard personal allowance of 12,570. However, income tax bands are different if you live in Scotland. So, and the below table is showing the personal allowance up to 12,570. You do not need to pay any tax on it, on this amount. Then from 12,571 pound to up to 50,270 applies 20% basic rate tax. Then after that the higher rate tax, which is a 40%, applies from 50,271 to 125,140 pounds. Additional tax rate 45% applies if you earn over 125,140 pounds. Now in the slide, I'm going to give you some example of how to calculate income tax. Work out if you should be paying income tax. Follow these steps. Add up all your taxable income, including taxable state benefits. Work out your tax-free allowance. Take your tax-free allowance away from your taxable income. If there is anything left, you are a taxpayer. If there is nothing left, you should not be paying tax and maybe due a refund if your earning is less than the personal allowance threshold. For example, including all your income, if your total income is £50,000 in a tax year, deduct the personal allowance £12,570 from the total income £50,000. Then multiply the remaining balance £37,430 by basic rate 20%. So in this example, it shows the income tax you need to pay on 50,000 gross income, total income is £7,486. If you are an employee of an employer, you also need to deduct NI. However, I will discuss the NI in my later video. Another example I'm going to discuss if your total income is more than £50,000. Here, total income is per annum £100,000. From the £100,000, deduct the personal allowance £12,570. Then up to £50,270 is multiplied by the basic tax income rate 20%. So on that amount, it comes the income tax £10,054. Then the remaining balance £37,159 will be multiplied by the higher tax rate 40%. So on that amount, the income tax is £14,863.60. So total income tax will be £24,917.60. If you are, as mentioned before, if you are an employee of an employer, you also need to deduct the NI. However, I will discuss about the NI rate in my later video. And if your income is £125,140 or above, your personal allowance is zero, which is you will be taxed from basic rate 20% on the first £50,270, and thereafter remaining balance will be taxed by 40% up to £125,140. Any amount above will be taxed at 45% additional rate. So viewers, I have given you the overview on income tax in England. I hope you have liked the video. As mentioned previously, I will discuss more topics on the income tax like property and rental income tax, self-assessment, VAT, NI, child benefit, and many more. If you subscribe the video, you will be notified of my other videos on all of these topics. So please don't forget to subscribe, share, and like this video. If you have any question, feel free to mention it in the video comment box. I'll try to reply as early as possible. Thanks for watching the video. Bye for now.